Hey guys, Toby Mathis here with the Anderson Business Advisors podcast, and I have Carl Zoellner on, one of our attorneys, and we're going to explore a little bit into the concept of this idea of what you oftentimes see. These gurus are out there telling you how easy it is to make money, and then you could leave your job, leave your job behind, and take it to the man or whatever they're going to be doing. So first off, Carl, welcome.
Thank you for having me. And I think this is the first time on the podcast.
Oh my gosh, you've been here for years.
Long-time listener, first-time caller.
Well, so, I always say podcast, but we use these on YouTube, and it's more to educate. And so the education component today is why you shouldn't listen to gurus and quit your job. And here we are in 2023. What have you seen in that realm? And do you agree with that sentiment that we should tell the gurus to go stick it?
Yeah, I do. And mostly because I'm one of the folks they're advertising to, right? I'm in my late 30s. I've got a little bit of expendable income, and I do like to learn about and invest. And sort of the biggest key or tag you see from all these folks are basically, here's how to quit your job. It's like, well, what if I don't want to quit my job? What if I just want to invest in this on the side and, sort of grow my nest egg for the future? So yeah, I don't buy into the run away from your job. Actually became a lawyer because I thought it would be interesting and it was something I wouldn't have to retire from.
Mm-hmm. It's always interesting that maybe they're going after the people that just hate their job or do something that they're really disgusted with. But it does seem to be like an emotional ply, which is, hey, we're going to show you how to replace it so you can leave, as opposed to, we want to show you how to make, passive income so you can choose to work the job that you love. There's never one, it never seems to be like, hey, do what you really love, or your vocation is your vacation and you're really enjoying your life. They never seem to focus on that. Instead, they focus on this pipe dream of, see, you can tell them all to take. It's like if you win the lottery, first thing you do is you leave your job. The people that are successful don't actually leave the stuff that they like doing. They might have some disposable income to do some other things, and they're a volunteer more than they're an employee. But it doesn't seem like the successful ones, at least, make these massive shifts.
No, I would agree. And I would also say too, it's kind of, I thought when I first started doing infinity investing, when you guys first rolled it out, I thought, you told me, you're like, the way to do it is just put money aside and forget about it. Get it into something and forget about it. And I was like, this guy, this rich goober telling me to forget about how am I going to forget there's money over there? And literally within the last couple of, year or so, I've been like, oh yeah, crap. I forgot about, I had $10,000 in I bonds over here. And it was, and it's just sort of like, okay, well, cool. So that's sitting there for a rainy day.
Yeah, you're not really supposed to forget about your money. You're supposed to know it's there, Carl. No, but the principle is sound, which is the old hack was, open up a brokerage account, have it get funded automatically every month through your paycheck or through, just pay it like a bill where it automatically gets the money and gets automatically deployed into an index or into the stocks that you care about. And then lose your password for 20 years and then come back and you'll be very, very successful because you're not messing with it. That's the concept, but there's a lot of reality in that too. And what we've seen with the wealthy is that they don't tend to change their lifestyle drastically based off of what revenue happens to be coming in at any particular time. What they do is they pick a consistent lifestyle and something that they like to do. And if they don't like something that they're doing, they find a way out. And so there's part of it where I look at the gurus and I say, okay, I get it. If you're miserable in your job, you want to do something else, but I don't think that necessitates the guru. I think that there's these folks out there that are training people how to make money that actually don't make money, that, they make their money selling a course or whatnot. And we've seen that. You and I have both seen that up close and personal in so many cases where it's like, even if you followed this and you did what they said, you'd still end up in disaster. It's like all these guys that teach,
or it's still a dice roll.
Yeah. So let's shift gears a little bit. So and focus on what's working. So you're dealing with people on a daily basis. I'm dealing with people on a daily basis. What are you seeing as the successful folks as of right now in 2023? What are they doing? What's the mindset that they have? And are there any opportunities that you see people following that's getting them good results?
So one of the things I've noticed over the past few years, even leading into COVID, was there was a lot of young professionals with a lot of disposable income. So we would go on the road and talk to, hundreds of people a week. And people would come up to me and go, these guys keep telling me, get rid of my job and do this. And it's like, I'm a doctor, I'm an attorney. I like what I do. I don't want to get rid of my job. So what a lot of them started doing was just, like you said, was basically have an auto draft off of your bank account for, $1,000 a month to, TD Ameritrade, or $100 a month to Fundrise, things like this. And it was like, eventually I didn't even miss it. And, I look over every so many months and it's like, holy crap, there's, I don't know, 10 grand in my TD Ameritrade account that it wasn't there when I started this thing. Or, same thing with Fundrise. And they're getting decent returns on conservative investments. And that's okay, because they still have the main engine or driver of their income in their careers, professional or otherwise. I mean, there's not only just attorneys and, doctors and things like that. I mean, people who are, just interested in running business, even their own businesses, without going whole hog into flipping or something like that.
Mm-hmm. Yeah. One thing that I've seen is so if I was doing this visually, I'd be writing something down on my left side that showed active income, which is generally speaking, it's going to be your employment and your side gigs, or your being an independent contractor. And you could fill in the blank. It could be Toro, it could be Uber, it could be, driving for delivery service. It could be flipping mobile homes. It could be being a real estate agent. It could be, being a loan originator. It could be fill in the blank, something that you're doing as a side job. And I see people going, from that edge, that left side, which is your W-2 and your side gigs, and moving over into the right side. And the right side has stock investments and passive real estate. And when I say passive real estate, I mean rental real estate, cash flow real estate. We're not flipping houses. That would be on the left side of the equation. That would be on the active side of the equation. But what we're doing is we're putting things in where the asset does all the work. Is that what you're seeing to this day, even in this crazy economy where, oh, the market's crashing. Oh, they're going to raise interest rates. Oh, real estate's crashing. Oh, you hear all this stuff. That, to me, that's all on the right side. That's on the passive side. And they're screaming so loudly. Are you seeing people just have failures, or are you seeing the wealthy folks still making their money on that right side?
Seeing the wealthy folks still making their money on the right side. So what I'm seeing is with the folks who are what I would consider, more sophisticated investors, they're taking little dings here and there along the way, right? Little chips and things like that. The people who were swinging for the fences, on the GameStops and things like that, they're the ones that got absolutely hosed when it turned around on them. But the people who were buying thousands of shares of AT&T are doing just fine.
Yeah, even though AT&T got a little bit of a bloody nose and they cut their dividend, but they had that little spinoff of Warner. They tossed that off. Yep. But everybody was still okay. Yeah, I kind of do the same thing. And by the way, I love investing in AT&T. They pay a great dividend. Even with that, I was like, I think I'll keep it. But I think I'm seeing the same thing. And I want to just reiterate something that you said in the very beginning, which is the engine that makes this thing go might be a W-2 job. The problem with the W-2 job is that you might get sick, you might, get fired, you might get laid off. You never know what's going to happen, right? Business could go get sold. It could go into bankruptcy, fill in the blank. But one day, you're an employee and the next day you're not. And if you're relying on that W-2 income, you might find yourself in a bad spot in the long run. So the idea doesn't mean quit your job. The idea is make sure that you're living on less than what you bring in, transition it over to the passive side until the passive side is compounded and significant enough to where You don't need the left side. And I think that's the misnomer that you see is people immediately think, if I do this, I don't have to work. Well, I mean, maybe if you replace your profession, maybe if you, hey, I'm going to go flip houses, right? And you're really good at it. Maybe you might transition out, but I wouldn't do it until you know you're good at it, right? I wouldn't until you figure that thing out. That's like a sport. It looks easy until you get out there and you start playing, and then you realize how difficult it is. Um,
Well, and I don't know if you've seen the same thing, but anybody I've talked to who's I would consider truly successful, uh, it was never about getting out of work. They just pursued their passion, and by pursuing that passion, they knocked it out of the park. So it was kind of like, you hear even gurus, we're sort of poo pooing on it a little bit, but the guys who did it right or did it well were sort of the ones that were like, oh yeah, this is pretty cool, and then got passionate about it, scaled it, and were able to then turn it into more classes and teaching other people how to do it. So
yeah, I have seen that. Like, and I shouldn't paint all people with the same brush, because there's people that would point at us and say, "Well, you're a guru." No, I'm a lawyer, and I just happen to see people that are successful, and I say this is what they do. But not all are bad, and not all are the same, and a lot of them are really good about something that they're very passionate about doing. The trick is understanding where there's hype and understanding where there's logic. Like, if you have a good job and you're able to live below your means, or even if you have a good job and you spend more than that job, but you're able to get a side gig or something else to generate additional wealth that you're able to put into into an investment account, that's good. You need to have that engine. Most people skip that part where you work your ass off and make active money and move it over into the passive side. And they think you can go right to owning a whole bunch of real estate. Hey, no money down, you could have 10 houses. Maybe not really. Like, I don't see it very often. I mean, I have seen people get no money down properties. There's usually a carryback and stuff like that. Like, you still have debt on it. It's not like it just somebody just said, here's a free property just because you asked, right? I haven't seen that. What I have seen is people say, hey, I have a good job and I have good credit, and I'm able to lever into some deals that I otherwise couldn't have. And I may have very low to no money down as a result. And I'm able to get there. But it required keeping that good paying W-2 job or that consistent income. And then they were able to transition. And over time, eventually the W-2 is not even necessary anymore. You're a known quantity. They've seen you pay back and do all that. Shift gears again on you just for a second. What have you seen? Like, if there's areas that people are investing in right now, since we're sitting here in 2023 again, and you've had pullbacks in the market, again, you have people screaming the sky is falling. What are the big areas that you're seeing both on the active business side, people are able to make some livings and within your clientele, and then also on the investment side?
I guess even through all of COVID, I haven't seen a huge change. I mean, for all the, I guess, puffery we hear on the TV, the jobs that have paid well historically are still paying well. The things that people invest in are still being invested in. I actually just saw in our Utah office, I actually just saw on the news this morning, they were reporting that this was the best month in real estate since before the pandemic. And it's like, oh, well, so that took
wait. Yeah.
So all the things that have been good in the past are still good. It's just a matter of, I guess, sort of wading through the hype. Like, people still need places to live. People still need to work. So, how could rental property be bad? The stock market's a little bit less. I mean, it's always been unpredictable overall, but there's still those safer bets as far as ETFs or, consistent dividend paying stocks and conservative investments. So it's the same. The stuff that's been good is continuing to be good. I would say sort of I think it's interesting is there's a couple people who are coming into the investment market at this point. It's people who are earning money, like you said, on the W-2 side, who are looking to invest it. And then there's people who've already made their money and maybe retired basically from that initial job and are now looking for a way to sort of spread out and extend that money out. And it's still the same answer.
How about the people that pulled all their money out in fear? Have you met anybody that like just reacted? They saw the news. Oh my God, the market's going to crash some more. Newsflash, the market crashes. And then it comes back, and then it crashes, and it comes back. But over time, it's always gone up. Maybe there's a magic force that'll push it down. Maybe there's something in the global scale, like we'd have to be off the U.S. dollar. You'd have to have some major things going on, right? But
I was when it was all going wild, I was actually trying to find a place where I could invest in Russian oil. When the Russia-Ukraine thing went off, I was like, it's going to come back. I mean, it's not like they're going to stop using oil.
I don't think you were allowed to. I think
no, it was illegal. So
yeah.
I didn't, but I was looking for it. I was like, if you could do it, it's coming back. It'll come back.
It's usually that obvious, though, right? You see that stuff, and you're like, yeah, it's that obvious.
It's it's illegal, except unless you're a politician, then you can invest in it.
But what we see now is a lot of people locked into their houses. They got these low interest rate mortgages, and I think it was if the mortgage rate of the equivalent of a $600,000 house a couple of years ago or a year ago is essentially a $400,000 house now, or a $300,000. Like it's that extreme. You've seen it just completely destroy the value proposition for what people are buying, and instead of crashing the market, what it's done is it said, I'm not going to sell my house because I'm not going to get anything close to it at the current interest rates. Like if I have to swap out my mortgage, since I can't just bring it with me, I can't get this much value for the dollar. So I'm just going to sit on my hands. And that makes it.
What I'm seeing is some pretty creative financing deals on purchases and sales. And
are you seeing subject tos? You're seeing people actually keep the mortgage on there?
My neighbor across the street sold his house and did it as a seller finance, was trying to do it as a seller finance deal. I don't know if he got it.
You just ratted out your neighbor.
Yeah.
I'm just kidding. No, but yeah, I actually bought a house in Vegas during the Great Recession that way. It was somebody who had a modification with Bank of America. It was right around 2%. And even though they had lowered interest rates considerably at the time, it was still quite a bit more. Twice as much. And it was just as simple using a trust and a service provider, and I was able to purchase it that way. And you're able to get a lot more. You're going to see folks that get savvy in those areas where they realize that it's not the house that's the value. It's the debt. It's that mortgage, that low interest mortgage is actually a valuable asset.
Yep.
And they're not going to want to replace it. The person who's forced to sell sometimes is they don't want to get rid of it. They realize that there's value there, and they don't want to have to go out and get another one. So it'll be interesting to see what happens in the note market too, on non-performing notes. If you see high interest rates, what's going to happen there? But anyway, there's plenty of opportunity in these types of things, and I think that you just named a few. We just talked about a few, and so we'll kind of go back on the last section and just talk about moving forward and what you're seeing, and what you're hearing for the rest of the year, as far as what areas would you be investing in, what areas do you think are hot for possibly doing side gigs, and based off your experience with working with so many hundreds of successful entrepreneurs and investors.
Yeah, I was going to say, I think that's probably one of the things we sort of underpitch the most as far as what our sort of platinum clients have access to, is that we deal with such a volume of people. We get to sort of see these trends and things as they're coming across, and try to share them as best as we can through all of our social media platforms, things like, and different classes we offer. But it has been interesting because the last recession, or the Great Recession, I wasn't with Anderson, and I wasn't really investing heavily at that time. This time I'm here and I'm seeing it. And from the beginning, we've said, everybody just take a breath, look at your fundamentals. And if you're good with your fundamentals, then stay firm. It'll all sort of work out for you. And for the people that have, yeah. And to your question earlier, did I see anybody run to cash and then regret it? Yeah, a few people. And they usually, the first thing they say when we get on the call is, I should have kept that whatever, Boeing or Tesla or whatever. And I cashed it out, and now I left money on the table. And it's like, well, worse things than leaving a little money on the table too. But yeah, you should have stayed the course. And if you were happy with your fundamentals, you should have stuck with them.
Yeah, usually you sell when it's all carnage, and then when it bounces back, you miss it. That's what we see. That's what I've seen over and over again. It was when you do anything off of emotion, chance the opposite of what you should be doing. I think it's kind of funny because you talk about the beginning of the pandemic, and I always like to just give people the visual of taking their right hand and stuffing it underneath their right butt cheek, and taking the left hand and stuffing it underneath that left butt cheek. And sometimes the best thing you can do, I don't know, sky's falling, great, sit on your hands. And you're not going to do stupid things like, hey, if you're holding onto a position it has a bleak future because it's been so overvalued. If you're one of our clients, you're probably not in it because you're following the right principles, that you're not going to be buying those types of companies. But let's just say that you did. If you have good companies, the best thing you can do is just wait it out and not act emotional. And I think that's true when you're dealing with gurus or anybody else. Is take a look, and if it sounds like a lot of hype, it doesn't mean that you don't do it. It doesn't mean that you throw it out. It just means that you do so measured. Maybe you find something that you love to do, that you're passionate about, that could actually replace your current income. You won't know until you've actually had some degree of success, and you never know right away. Like, you may think this is really awesome, I love it. Great. Channel that energy and learn how to do it really well. If you're passionate about it and you're good at it and actually makes money, you'll be successful. But you can be as passionate as you want about fixing typewriters. Chances are you're not going to make much of a living at it. You got to find something that you're passionate about, good at, and has an economic benefit. And there's plenty of things out there that you could find. And if you find a guru that's talking about one of those things, just understand that a lot of those coaches that are there is just there to sell you stuff. And they may be well-intentioned, but don't leave your job. Don't listen to the guru. Don't quit your job. That job is a little engine running everything else, dumping money into your investment. And do like Carl's talking about and all the successful clients, and that is put it into things and be patient. Don't forget it. Unless you like, surprise, I just found it's like every Christmas. I actually go through my accounts and find the ones I hid. But no.
I did have a client like that who was like, yeah, every Thanksgiving, I look at all my accounts and I write my checks for all the charities I donate to. And then every December we start over again.
I know plenty of people don't believe you. And they're like, yeah, actually, a lot of the successful folks, it's in the methodology. They're not super attentive, and they will forget that they have houses and investment accounts. And I've seen it so many times now. I used to think it was just oh yeah, I forgot about that house. And I'm like, sure, Sherlock. Yeah, you're just teasing. No, actually, that it wasn't on first thing in their mind because it's not that critical to them. And they were like, I actually have to do a little bit of an inventory of what I have. Thank God you have accountants tracking it for you sometimes, right? Otherwise, you might leave it someplace. But it's because they're doing other things. And this is a great way to conclude. If you love what you're doing, don't let somebody talk you out of it, right? Unless it's illegal. No. But if you love what you're doing and you have a good job and you love your job, there's nothing better than being a volunteer. And there's the old adage that money doesn't buy happiness. And I say that money can buy happiness if you give enough of it away. And if you're in a situation where you're free to be able to do more for other people and give more away, then you'll find a lot of happiness in that. At least I keep seeing that with our clients. Carl, anything else?
No, I think that's it. As far as just the little, I know we like the mind twist stuff, but the mind twist of the whole, when you get to a certain income level as well, you actually start buying things for the tax breaks, not for the return on a lot of stuff too. That one usually kind of trips everybody out as well.
That tax break is part of the return. If it saves me 30 grand, that's that 30 grand I may as well have made, right? So it all gets baked into the pie. Carl, you've been a wonderful guest. I'll have you on again. We won't wait many, many years, maybe a decade, but no, we'll get you back on. I really appreciate your insight. And there's no replacing talking to folks like you who are actually dealing with the investors, and lots of them, because you get a good taste. You got your finger right on that pulse, and you kind of know what's going on. So I appreciate you coming on.
Thank you so much for having me. And if you're already a Platinum client, look forward to chatting with you.